Yes, so when you think of like capital allocation, the typical, a couple of ways you can do it, right? You can, buy back shares, pay dividends. You can redeploy the cash on new investment, including acquisitions, for example, right? But I think in this case, the opportunity is more compelling in terms of redeploying the cash to acquisitions, right? Because think of like when they buy this, utility business, infrastructure business, they are also generating cash flows, right? And those cash flows can be further used to, fund new businesses. So I think from a capital allocation perspective, that's a better way to grow the NAV of the business over time, right? Because, if you think of the, like the typical Berkshire model, right? The idea is to grow the underlying net asset value per share over time, right? And similar to Buffett, I think, management realized that maybe, retaining the cash and redeploying it, they can generate better returns. Because at the end of the day here, here's another major difference versus, investing at the Hutchison level versus investing in the Cheung Kong level. Because I think when it comes to the typical, this kind of Asian holdco structures, it makes more sense to actually invest in the top, because it comes in actually, at a same level as the controlling shareholders.